Thanks a lot for joining me today. I'm Ron Shevlin, Director of Research at Cornerstone Advisors and the author of the FinTech Snark Tank blog on Forbes. Today, let's talk about banking's delusions of digital transformation. The conventional wisdom in the industry is that digital transformation has been accelerated. We've seen articles like press releases from Boston Consulting Group who said that COVID-19 is set to radically accelerate digital transformation in retail banking. They cite as proof for this that 1 in 4 consumers plans to use branches less or stop using them altogether after the crisis. An article in rtinsights.com said that led by employees working remotely and customers increasingly doing their banking online, digital transformation is accelerating in the banking sector as a result of COVID-19. And an article in the financialbrand.com said that banking is quickly moving from branch-heavy, product-centric firms with legacy technologies and cultures to consumer-centric organizations with seamlessly delivered personalized solutions. My take on all this? Nonsense. First of all, citing the 25% of consumers who plan to make less or no use of branches going forward is a weak argument for transformation. First of all, 25% is not a particularly large number. And who said that these customers aren't going to go from using the branch to using the old-fashioned telephone? Who said they're going to go use it for digital? Not a good argument for accelerated transformation. My second point is that banks are not moving quickly to providing personalized solutions that can be delivered seamlessly. This is a very difficult task, and I can assure you it does not happen within a 3 to 6 month period. There's so many things that have to happen for personalized solutions to be delivered seamlessly that 3 months of a crisis did not accelerate that transformation. What's happening here is that people are really conflating or confusing a couple of concepts. The increase in digital adoption that the industry has seen throughout the crisis does not translate or equate to digital transformation. It kind of begs the question, what is digital transformation? I'm hesitant to kind of give a definition for this or try to enforce a definition, because the reality is that concepts like digital transformation work best when they can be suited to and accommodated for by individual institutions for their own particular needs. But in a survey that I conducted last year of financial services executives, I put out a few definitions and asked them which ones resonated best with them. And there was one in particular that resonated with 80% of the executives that I interviewed or surveyed. They liked the definition that digital transformation is the integration of digital technology into all areas, fundamentally changing how to operate and deliver value, and a cultural change that requires organizations to continually challenge the status quo, experiment, and get comfortable with failure. If you're working in a bank or credit union, does that sound like your organization? I didn't think so. You're not digitally transformed. Digital transformation is really about a number of things. First of all, it's about strategy realignment or strategy migration. In other words, it's really an opportunity to take a step back and say, is the strategy that we're pursuing today working? And if it is, what could we be doing better, more efficiently, more effectively, more digitally to enhance that strategy? Or it's a way to step back and say, you know what, we're not on the right path here. We need to migrate to a different strategic value proposition in the industry and in the markets in which we're playing. Digital transformation is also about changing how the organization does business. It's not simply about taking a digital application where you used to take a paper application. It's about all the things that happen after that application is accepted to the point where an account is funded and in the hands of the particular customer or user. That's not happening to a large extent in just 3 months. It's also about catalyzing cultural change, and not just among the rank and file who are resisting change, but cultural change at the top levels of the organization from executives who, let's be honest, have quietly resisted the move to digital. Digital transformation is also about reprioritization. It's about looking at the things that you're spending money on today and deciding, you know what, this is not the best place to be putting our money. We need to be reprioritizing our investments in our budgets. The Digital Banking Report recently conducted a survey of financial services executives and asked, what stage is your firm at in its digital transformation journey? I found the results very intriguing and very interesting. According to the Digital Banking Report survey, 2% of financial services firms don't even have a digital transformation strategy today, which is pretty amazing. I would have expected the number to be actually a lot higher than that, but it just goes to show you how many financial institutions are jumping on this digital transformation bandwagon. 8% said that they're still in design phase, which means that there's a lot of institutions out there that are already well down the path of this digital transformation journey. 12% said that they have a limited deployment with results unknown. So we're only here at about 1 out of 5 financial institutions, 22%, who are still sort of in the early stages of this. The vast majority, 62%, said that they are partially deployed in their digital transformation journey. Troubling that 13% of them, though, say that they're not seeing results as expected. Kind of at the top of the pinnacle here, this leads 17% of institutions who say that they are deployed at scale, but troubling 10% of them who are not delivering as expected. So when you add that into the 13% of the partially deployed who are not delivering as expected, you've got almost 1 in 4 financial institutions who are going down this digital transformation journey or digital transformation path and not seeing the results that they had anticipated. That's pretty troubling. So the reality here, let's take a step back and do a reality check, is that banks are nowhere close to having achieved digital transformation. These delusions that we are accelerating it over the past 3 to 6 months is just crazy talk. Now, I'd like to share some additional research that I conducted at the end of last year around digital transformation. I surveyed about 150 financial institutions, and I ended up segmenting them into 3 different categories: the leaders, the middle of the pack, and the laggards. And I did this segmentation based on their self-reported results of their digital transformation efforts. There was a whole bunch of them, but I want to highlight 3 of them here: efficiency, service delivery, and revenue generation. Basically, 83% of those that I categorized as leaders said that they've already achieved improved efficiency from the digital transformation efforts, in contrast to just 35% of the middle of the pack and none of the laggards. 80% of the leaders have achieved improved service delivery from their efforts versus 38% of the middle of the pack and just 16% of the laggards. And almost 6 out of 10 leaders have already realized increased revenue generation from their digital transformation efforts versus 5% of the middle of the pack and none of the laggards. Now, given this segmentation, the important thing to be considering here is, well, what determines what they're doing? What are they doing that are helping to drive these results from their digital transformation efforts or journeys? While there's a number of things that really distinguish the leaders from the middle of the pack and the laggards, there are 3 that I'd like to focus on here today. The first is around technology deployment. 63% of the leaders have already deployed some form of cloud computing versus 43% of the middle of the pack and just 13% of the laggards. Almost 6 out of 10 of the leaders have deployed APIs, application programming interfaces, versus a little more than 1/3 of the middle of the pack and about 1/4 of the laggards. And half of the leaders have already deployed some form of AI or machine learning capabilities, whether it be robotic process automation or chatbots or something like that, versus 18% of the middle of the pack or the laggards. Now, I'm not saying that you have to deploy some form of AI or machine learning tools in order to achieve digital transformation. But the reality is that the laggards are far behind, as are the middle of the pack, the leaders who are already going down the path of having transformed their computing approaches to deploying cloud computing and being much more active with APIs to achieve some form of connectivity both internally and externally. The other 2 areas relate to data. I specifically asked the financial institutions I surveyed about their use of data for marketing purposes. And what you can see is that among the leaders, about 1/3 say that they are using account aggregation data in their marketing efforts versus just 15% of the middle of the pack and 12% of the laggards. A little bit less than that are 30% of the leaders using digital behavior data in their marketing efforts. Only half as many of the middle of the pack are doing that, and just 8% of laggards. That you can read down the line in terms of social media data, propensity to buy data, spending data, and bill pay data. These numbers aren't particularly high, even among the leaders. So we can see that even those who seem to be ahead of the curve from a digital transformation effort still have a long way to go in terms of their utilization of data, specifically for marketing purposes. But this is a very specific example. And I want to kind of bring this up a level to a sort of a broader, more strategic perspective, and look at how the leaders are distinguishing themselves from the middle of the pack and the laggards from a broader data and analytics perspective. I asked the respondents, what best describes your use of data and analytics in business processes? Among the leaders, just 7% said that data is often mistrusted and analytic insights are rarely acted on. In contrast to 15% of the middle of the pack and almost a third of the laggards. A little more than a quarter of the leaders said that they still have conflicting functional views and the reports they get are dated versus almost half of the middle of the pack and 40% of the laggards. The majority of the leaders are sitting in a situation where they say that they have common data views across functions and processes, and data delivery is timely, if not real time, in contrast to 40% of the middle of the pack institutions and just a little more than a quarter of the laggards. But you would think that if a financial institution was truly digitally transformed, that an analytical capabilities would be embedded in operational and decision-making processes. And yet just 10% of the leaders and none of the middle of the pack or laggards said that they have that capability. Reality check, banks are nowhere close to having achieved digital transformation. And in a 3 to 6 month period where their focus has been on fighting fires with PPP processes and so forth, and dealing with customers who can't access the branch, there's no way that digital transformation has been accelerated throughout the crisis. These are the delusions that are facing the industry today. And I think the reality of the situation is that for digital transformation to occur, or even accelerate in banking, 4 things need to happen. The first is that we need a complete overhaul of the legacy technology. Time after time, the existing core apps that banks have deployed are barriers or hurdles to achieving the innovation efforts that they are undertaking, or really just barriers to achieving any kind of change and improvement in the organization. Now, there have been a good number of tools that have come out over the past couple of years that have helped sit on top of the legacy applications to help from a integration and migration perspective. But for the industry and for any individual institution to really claim that they are digitally transformed is really going to require pretty much a complete overhaul of the legacy technologies that exist today, and at a minimum, the core apps that sit in the institutions today. Second requirement is the maturation of artificial intelligence. I wouldn't argue, and I don't think a lot of people would argue, that AI and the various types of tools that sit under that umbrella are going to have a major impact on financial services and banking. But to a certain extent, those tools are not very mature today, and mostly because there's just not a lot of data that's helping to drive a lot of the promises of AI. And there's also a number of ways that this will continue to evolve. But I really want to focus on where I think what's going to happen with AI is what I think of as the assimilation of AI. What's going to happen over the next couple of years is that AI will become indistinguishable components of apps and systems. We're already trying to see some moves with that already. NCR has partnered with an AI provider to integrate those AI capabilities into the applications that NCR provide. That's just a new partnership that was announced within a week ago or so. What's happening is that this is going to be a multi-year process that's really going to drive the digital transformation of a lot of the apps, and we'll see a greater maturation of AI. The other component to this, though, is on the data side. And this is going to be very difficult because tracking original data sources will become difficult and unauditable to a large extent as the number of data sources proliferates and the sources and the inputs that an organization uses to do everything it does really proliferates. So really what's happening is that the amount of data that's needed for personalization is so all over the map. Things like social graph, credit scores, contact history, financial health, demographics, channel behavior, purchase intention, attitudinal as well as behavioral data. This is going to take a long time to kind of bring together and make usable, not just for AI purposes, but for any application purposes, especially marketing related ones where we're looking to personalize marketing messages or personalize and customize the financial products themselves. This is going to be a long process over the course of this decade before we can really claim that digital transformation has occurred. The third requirement for digital transformation is, I hate to say it, a new generation of senior executives. Hey, folks, I've been through this before 30 years ago when PCs really started to become popular. And I remember a lot of executives back then saying, you know, I'm never going to use a PC. I don't type. I have somebody who does that for me. And it really took that generation of executives to retire and move on, and for the baby boomers to come into the executive suites, for the adoption of personal computers to really take hold in a lot of organizations. And that's similar prospect and similar path that's going to happen in a lot of financial institutions today. It's going to be the retirement and the moving on of a lot of baby boomer executives, turning things over to Gen Xers and to the older millennials who are really going to usher in this wave of digitization or digitalization. And in fact, even in the survey that I conducted recently, when I asked what are the barriers to digital transformation in your organization, 85% mentioned cultural and behavioral factors. And as I mentioned before, this is not simply about changing the culture of the rank and file and the people lower in the organization. This is about changing the culture, attitudes, and assumptions of people at the top. And I think the reality is it's going to take the replacement of those executives. Look, if you've got 30, 40 years of experience in an industry, you have adopted and you've accepted certain things to be true. And digital transformation is challenging what a lot of executives believe to be true. So until we really see a wholesale change at the top, I don't think we've achieved digital transformation either at an individual organization or at the industry level. And fourth, and maybe most important to this change, is we are going to require more shocks to the system. Hopefully they're not as bad and as harmful as the COVID shock has been to the system. But you know what? We are going to see some future shocks to the system over the course of this decade. And let's talk about three of those shocks that I think are coming down the pike. The first is the impact of big tech. You know, it's amazing for me to think that any institution can claim to be fully deployed on a digital transformation without really understanding and being integrated with the impact that the big tech firms are having. In a survey I conducted earlier this year, 70% of the financial institutions I surveyed said that they see big tech as a significant threat in the coming decade. Firms like Facebook, Amazon, Google, Apple. And it's no wonder when you consider that companies like Apple are not just offering merchant credit cards, they're out there in the market with a general purpose credit card, doing very well and transforming the customer experience, especially from an application perspective, as well as from a usage and card management perspective. Google made news last November when it said that it was going to come to market with a checking account. And MarketWatch asked, why so many companies want to be your bank? Well, here's the thing though. Google doesn't want to be consumers' banks. Google wants to be financial institutions' vendor. Google isn't going to market with its own checking account. It's going to market with a checking account in which they're partnering with financial institutions. In addition to that, Google's also in market with an AI-based lending tool that helps financial institutions analyze their PPP loans. They're also in market, especially in Europe, more so than here in the United States, with its Google Cloud offerings and have seen a very good adoption, especially among some large banks in Europe. And I expect them to be more aggressive about that in the US. Google is looking to become a fintech vendor, not necessarily a replacement. This is going to help accelerate the digital transformation in a lot of organizations. And not just with Google, but even with companies like Amazon. Amazon is now partnering with Goldman Sachs to do small business lending. It was leaked, whether this was true or not, that they were thinking about doing a marketplace for small business lending for their merchants and decided to do a partnership with Goldman Sachs, which means at some point down the line, there may be a bigger opportunity. In reality, what's happening, especially with Amazon as well as the big tech companies, is that they are becoming distribution channels for financial institutions as much as they are threats or competitors. And until this plays out, there's been no digital transformation in the industry or at a particular individual institution level. The second future shock that's coming down the pike will accelerate the digital transformation of financial institutions is this notion of embedded finance. With tools like lending and insurance and banking and payments embedded into not just these big platforms, but potentially in any merchant or retailer or any company that takes a payment or could possibly benefit from making a loan to their clients. Lightyear Capital recently did a study, which I helped work on, in which we forecasted embedded finance from a lending, insurance, and payments perspective. And this is going to be, in total, close to a $200 billion in revenue opportunity over the next 5 years. This is going to cause, again, from a distribution channel perspective and a threat perspective, a lot of digital transformation in the industry. Does this pose opportunities for banks to become embedded in these players, or are they going to be shut out from these opportunities? Again, you can't possibly have been digitally transformed unless you have dealt with these types of issues. And the third future shock that's coming down the pike here is cryptocurrency. I think it'd be really hard for anybody to argue that we have already seen what the impact of cryptocurrency is going to be on the financial services industry. That impact has yet to be felt for sure. There are a certain number of things that are certainly happening from a cryptocurrency perspective that should be on the radar of a lot of banks. Of course, the US Senate proposing digital dollars to facilitate payments. But you think about it, that's going to be managed to a large extent by the Fed with the industry, and would probably be a managed transition should that happen. But there are other things happening from a cryptocurrency perspective that pose threats to financial institutions that would facilitate and hasten their digital transformation. Efforts like what Facebook is doing with Libra to kind of create its own private cryptocurrency. Facebook is not the only private organization doing something like that. Walmart last year announced that it was going to develop a crypto coin, which payment source thought that could be a backdoor to banking. Personally, I don't think it's a backdoor to banking. It's a threat to the payment system. What Walmart wants to do is get rid of interchange. That's a huge drag on their earnings and profitability, and they've been trying for years to get rid of that, and they see cryptocurrency. From a digital transformation perspective at an individual organization or even at the banking industry level, we can't possibly have seen what the impact of cryptocurrency is. At a recent presentation, Mark Zuckerberg made the comment that the future is private. I don't think he was referring to cryptocurrencies, but he could very well have been, because that's the threat that's coming down the pike from a cryptocurrency perspective. It's not public things like Bitcoin or cryptocurrencies like that. It's changes that private companies are introducing that is going to have an impact on the banking industry. So to kind of recap here, reality check is that there are a lot of delusions of digital transformation in the banking industry. But the reality is that banks are nowhere close to having achieved digital transformation. But these external shocks to the system are going to help accelerate the pace of change this decade. It's going to take a while. It's going to take throughout the whole decade for this transformation to occur. But by 2030, into the next decade, that's when we'll truly see this transformation of a digital transformation of the banking industry. Well, I appreciate you guys spending some time with me today on this topic. If you'd like a copy of the slides, any questions that you might come up, I'll be on taking your questions, or you can reach me at rshevlin@crnrstone.com. I hope you'll check out the FinTech Snark Tank on Forbes, and would love for you to connect with me on Twitter. Thanks a lot. Enjoy the rest of the conference.